One of the biggest themes to emerge in fintech this year, meantime, is the use of data and how companies collect and store information and how they prevent more breaches. With more than 80 million users, it's a top priority for Credit Karma, says Credit Karma. I want to get to Bloomberg's Selina Wang in New York, joined by Credit Karma CEO Ken Lin. Selina?
Thanks, Emily. Ken, so after the Equifax breach happened, signups at Credit Karma actually spiked, which means that consumers were going to trust yet another financial institution with their sensitive data to protect themselves. So what's your reaction to that?
Well, I think that it's important to note that, this is something that more and more will happen. And, it's important to make sure that you have the right access and the right protection. And I think for us, it was signing, there's a first party relationship that really matters. I think the outrage at times was, a company that you didn't have a relationship got breached and your information was lost and stolen. I think for Credit Karma, we very much focus on having that access and education, making sure that consumers understand what that is.
And I'm sure you've been following the Facebook Cambridge Analytica saga. There's a lot more scrutiny about the way tech companies collect, aggregate, and use that data. You collect a lot of sensitive information on your users. So how are you applying that data and keeping it safe?
Well, our first priority at Credit Karma is always security. We've said that from day one. I think the key here is we give people access to information they historically don't see, right? So, when it comes to your credit report, it comes to your financial information, we're actually providing all the information that consumers, or more specifically banks, are using to make determinations around eligibility. So we actually provide that access, number one. And number two, I think with that, consumers actually have more power. They're able to see when there are errors. And I think the other part of that is really the first party aspect of it again. Consumers are giving us consent to look at that information to have it within our warehouses, and we don't sell or share that information as part of our user privacy policies, and I think those are important aspects of the business as well.
Now, free credit scores was something that you were trailblazer in applying and giving to consumers, but now it's no longer novel. You have credit card companies, banks, and competitors giving that information for free. Yet despite that, 1 in 3 adult Americans use Credit Karma. Why is that, and how do you keep on growing market share?
Well, I think you have to remember that when consumers are actually looking for credit scores, they're actually looking for what the options the credit scores provide them, right? And I think that has been our note. So we're not a credit score company. We're a technology platform that's really focused on understanding what the needs of the consumers are, so specifically around their finances. So at Credit Karma, we see about $4 trillion worth of consumer debt, for example, and we're able to help those users optimize. Do they have the right rate? When is the right time to apply for a different product? And I think that's what consumers are looking for, and that's what Credit Karma is building.
So Bloomberg reported earlier this year that you missed the 2017 revenue targets. Sort of walk me through that, and what's the goal for this year?
Because we're a private company, we don't share a lot of that information. But my note is that that was our stretch goal. That was that Bloomberg covered, which is fine. But from a board perspective, I think we were 1% off. We are seeing good, strong double-digit growth in our business, and I think it's a testament to the value that we're creating for our members.
So what's the ultimate vision? You've expanded far beyond free credit scores. You give advice on all sorts of things like loans and even automobiles. So what's next?
Well, we're here to talk about the future of finance, and when you really think about it, there's been great innovations in technology, whether that's e-commerce, whether that is mapping. But when it comes to consumer problems around what loans to apply for, what's the best interest rate, how do you simplify the confusion in this space, I would argue that there's actually not that much innovation in that space, and that's what we're very much focused on. So when a consumer registers for Credit Karma, we spend a lot of time understanding how are they using their finances and how can they optimize the things that they are doing, and how can we predict and help them get to that next stage, whether that be saving for retirement or buying their first home.
And Silver Lake recently invested $500 million in the company at a reported $4 billion valuation. You've also been around for more than a decade. So how are you thinking about an IPO?
I always think that the IPO is actually a tool in our toolbox in terms of achieving our mission, which is really to help consumers and really change the space that we're in. So we think about that first and foremost. So the time to use an IPO is when you need to raise capital. That shouldn't be the end goal, and we've always thought about it this way. And our perspective now is that there's a lot of meaningful investment that we can do in the private markets, and we want to make sure that we invest in the right way, thinking about that mission in the future.
Neither you nor your co-founder from Silicon Valley, and you've talked before about how that's helped you really understand the average needs of Americans. Do you think there are enough companies being created in Silicon Valley that address the needs of average Americans?
I think that's a great question. I think that there needs to be more. I think that to get to scale, particularly in finance, is the way you change the industry, because the companies that play in this space are so large and they have such market power in terms of what innovations are. So I'm a big proponent of the Valley, but more importantly, big proponent of supporting the ecosystem, because at the end of the day, these companies that are getting to scale are the ones that are going to help change the ecosystem. Is going to help make finance more efficient, and that will put real money into the hands of everyday Americans. I think that's a problem that is oftentimes ignored.